Welcome back. You're watching The Money Show, and it's time to get your portfolio queries answered. I have Shweta Rajani as an expert today, and Sanjeev is there on the phone line to ask his question live from Pune. Hi, Sanjeev. Good evening. Thank you so much for sending your question.
Good evening.
All right. So, Sanjeev, I have your portfolio details, and current SIP is monthly SIP is 1,27,000. Is that right?
Yes.
Okay. I will just confirm the fund names that you've sent us: Axis Small Cap, Nippon Small Cap, Quant Small Cap, and HDFC Mid Cap Opportunities, Motilal Oswal Mid Cap, SBI Mid Cap, Large Cap. You have ICICI and Motilal Oswal Large and Mid, Parag Parikh Flexi Cap, HDFC Multi Cap, ICICI Equity and Debt, and Tax Saver of Miracid. Okay.
Yeah.
You want to reach 1 crore and 2 crore fast and safe. Any timeline
Yes.
that you would want to give us?
Timeline is 5 years, next 5 years, and then 10 years. So,
Sure, looking at the investment amount, I don't think so that should be a problem. But are you okay with so much of small cap exposure in your portfolio?
no, actually, I need the suggestions that
Sure,
what
yeah,
changes I
because
can make in my
yeah, that
existing.
can be
Yeah.
consolidated. Definitely, definitely.
Yeah.
All right, Shweta, what is your recommendation here?
Hi, Sajeev. So yes, I did go through the portfolio, and what I was seeing is probably because you want to get to your goal faster, you've taken a little aggressive stand, and you've built more of a mid small cap portfolio. In fact, as you're going with the amount of SIP that you're doing in 5 years, you can reach your goal of around 2 crores that you need. Now, one observation, like
बस
even
कहाँ
Kavita
चालू
highlighted,
है assignment पे?
like what you've mentioned in what we've seen, around 84,000 out of this 1,27,000 crores is getting invested in mid and small. That's almost 67% of your investments. That's too aggressive. Ideally, you shouldn't have at this point of time more than 40-45% of mid small cap exposure. So that's where you need to cut down on. I'm just going to suggest you the schemes where you should stop your SIP, and once they're out of exit load, you can get out of them. These are Axis Small Cap, Quant Small Cap. There's SBI Magnum Mid Cap, HDFC Flexi, HDFC Multi Cap that you have, and you have a hybrid fund in the portfolio. You can avoid that too. What you can add instead in your portfolio, or to these rather, would be add for an SBI Contra, HDFC Flexi, Kotak Multi, and ICICI Pru Focus. One more thing, you have an ELSS in your portfolio where you're doing an SIP. Now, this depends on which tax regime are you going to follow for this year. If you are in the old tax regime, then you can continue the tax saver. It will give you a ATC benefit. But if you're moving to the new tax regime, then ideally you can avoid this ELSS SIP as well in the portfolio, because it will lock in your money for 3 years, and open-ended diversified categories anyways, give you good options over there. So these were some of my suggestions on your portfolio.
Okay.
Sanjeev, anything else you want to ask Shweta?
Actually, I had a quant active fund in my
Okay.
portfolio, but I have stopped the SIP of it. But I had around 2,66,000 in that. So I was doing STP from that to quant small cap. So should I do that to slowly transfer the funds from there to quant small cap?
Okay.
Uh,
Perfect.
no,
Shweta?
Sanjeev, don't do
Yeah.
that. So don't do that. You can continue with the Quant Active Fund in the portfolio, because, like I said, at least the active fund has large, mid, small. So it has around 25-30% of large cap as well in the portfolio. So don't do that STP of active to small.
All the best, Sanjeev. Let's move on. And I have Harsh on the phone line with me from Mumbai. Hi, Harsh. Good evening.
Hi, ma'am. Good evening.
All right. So,
Hello. Yeah.
Parag Parikh Flexi Cap, Motilal Oswal Mid Cap, Tata Small Cap, HDFC Flexi Cap. You want to add 15,000 SIP more, and for that you need a fund suggestion, and you also want to know whether this fund is whether this portfolio is well diversified. You have done lump sum in JM Flexi Cap and Quant Large Cap. Is that right?
Yeah, that I had done, but I have already redeemed that amount. The JM
Okay.
Flexi Cap and the Quant Life Cap, I have redeemed it.
So you have redeemed them. You have invested it somewhere.
No, I have to invest that lump sum amount. So that also I wanted to ask, 3 lakh rupees which I have redeemed, I need to invest. So where should I invest along with the 15,000 SIP?
So 3 lakh and 15,000. Any specific reason why you redeem that amount?
Last 1 year, I am seeing that the returns were not, the quant was not really performing very well. And in terms of flexi cap, I was already having Parag and HDFC flexi cap. So thought of redeeming with JM flexi cap.
Any how much time did you give to these funds? What was the time given for investment?
JM and Quant, I had invested a lump sum only last year in the month of June. So after
Last
investing
year in the
lump
month
sum,
of
the
June.
markets, yeah, last year.
Oh, okay. So less than a year.
Yes.
Okay.
But the only
Okay.
mistake I think I did was doing a lump sum amount, and after that there was fall in the market which led to the downfall of the fund.
Sure. All right. So let's connect with Shweta. So Shweta, first thing first, he wants to invest more. We will also take your review on his portfolio as far as funds are concerned. But before that, the timeline that he gave to these funds, last year June he performed. I think the market started getting volatile from November, December onwards. The later half of October we started a volatility that was happening in the market, or market started dipping. He did not complete a 1 year's time. I mean, I'm not talking only about the exit floor, but even in terms of investment strategy. When you talk about equity and when you talk about a flexi cap, when you talk about a large cap, in fact, this would have been the time where these funds would have given him some performance if he would have stayed, for slightly longer term, which could be more than a year, definitely. How do you look at it, and how would you like to recommend, not only to Harsh but to also other viewers, who just look at day-to-day performance of a fund and compare it to their peers, which is also the right way to do it, but then maybe the time horizon should have been more.
Right, Kavita, and Harsh and everybody. What happens is it's a common thing that I have noticed, that people look at the past return of the fund and take their investment decision. Likewise, what they do is they look at the return of the fund and immediately also take an exit call. Now, just taking this is example of Quant Large Cap, I'm sure Harsh has invested in it in June because Harsh looked at the last year performance, 1 year performance of Quant, and in fact, it was topping the charts in the large cap category. It was amongst the top 3-4 funds, and therefore the investment decision would have been taken. But just like markets go through cycle, funds also go through their cycle. And after giving maybe a 9-month period to the fund, again, Harsh looked at the underperformance where it moved to the bottom quartile of the category and has taken an exit decision. I don't think this is the right approach to have, because, like I was mentioning, funds go through their cycle. The best performing fund in a particular year, it's historical data says that 25% of them may continue in the top quartile and the rest move to the rest following quartiles, but they also rebound. So you have to give time to the fund manager in case you've entered at that period where it's going through its down cycle for the fund to revive. Good fund managers who've displayed good
Shweta, can we
capabilities
also
in
know about
past.
the funds? Yeah, Shweta,
Hello.
can we also get your take quickly on his funds?
Absolutely. So coming to the funds, I would say just two exits here: Tata Small Cap and JM Flexi. You've already exited. Instead, what you can add is an SBI Large and Mid and an ICICI Pru dividend yield to the portfolio.
All right, Harsh, all the best. And you want to add more investment, you can maybe divide that. He can do that in these funds itself, right?
You can
3
do it in
lakhs and
these two
then.
as well as the existing
Sure.
schemes. Yes.
All right. That'll be all. Thank you so much, Shweta, for being on the show today. And for all our viewers, I'm going to leave you with our WhatsApp number, email ID, where you can send across your questions. Thank you so much for watching. Goodbye.